Welcome back to another episode of Bitcoin Q&A. Day 2, questions 4 through 6. Somehow, both McShane and I are up bright and early. The sun is rising. Thank you for joining us wherever you are watching around the world. My name is Q. This handsome gentleman to my left is none other than McShane. What do we got in store for you? Well, you got two bozos here who are going to try to talk to you about drive chains. We're going to get into an age-old question of how many wallets do you have, or something to that effect. And of course, we're going to talk Bitcoin and taxes, but in a very interesting loophole kind of way. And then, of course, today's questions are none other. Oh, wait, those were the questions. The news stories that we're about to dive into include Elon Musk, include the recent stuff around Grayscale. Wait, that's not right.
The news stories we're getting into today are BlackRock's investment in publicly listed Bitcoin companies.
Yes.
The government's
Oman.
new crypto tax rules, and yes, Oman. A lot of money.
Okay, cool. Let's dive into BlackRock. So from public listings and public reports, after releasing their earnings reports, it's been uncovered that BlackRock has a significant investment in 4 out of the top 5 publicly traded mining companies. So the companies that BlackRock owns a stake in are Riot, Marathon, Cypher, TeraWulf. Hut 8 is the only top 5 mining company that BlackRock does not own a piece of. It is worth noting that BlackRock is the number 2 shareholder.
That's actually
all 4.
I don't think that's right, Q. I think they do own a Hut 8, right?
Do they?
I mean, this is from reading the wrong thing. Oh, okay. I see. Of the 5, that is the one they don't own. My bad.
Yeah.
So they're Riot, Mara, Cypher, and TeraWulf. They're
so
the second.
There's one more thing that I want to touch on this story before I hand it to you. The thing that's interesting and worth noting, so they own about a little more than 6% each of Riot and Marathon. Mm-hmm. The combined market cap of these two companies is around $4 billion, depending on the day and the price. That is about the same amount of money that BlackRock probably loses on a daily basis. Like, that's such a small, insignificant, that is less than 1% of total assets under management. So really think about that when we start to have these conversations around, BlackRock. And then this article that we're talking about that is on Crypto Slate, they do a really good job also pointing out, actually, no, this was a different article I read. Never mind, not the Crypto Slate article.
You gotta eat primary sources, my man.
Yeah, well, I read this from 6 different sources, but they, I guess, have they also own shares of other ETFs and funds and stuff. So they own some shares of a Vanguard fund. Well, guess what? That Vanguard fund also owns shares of Riot. So they have even greater exposure than what it already looks like. I think this is interesting as a confirmation from BlackRock, but on the other hand, I do think it's something to be wary of and be conscious of, because if BlackRock wanted, they could buy out Riot and Marathon through the public markets very quickly and very easily.
Yeah, I mean, you got to look at this as an investment of $411.5 million. BlackRock has 117.6 billion assets under management. So that's 0.35% investment into Bitcoin miners by them. I mean, that could generate huge returns for sure, but it's not like a big move by BlackRock, really, by any means. That's kind of just dipping the big toe in. Tiny allocation, and then other exposure to Bitcoin in other ways as well, at least to some of the price action. I think particularly this will get interesting post-halving. You see mining stocks do some really crazy things. I mean, their ability to service their debt gets cut in half, obviously, with the block subsidy getting cut in half. So, I think some of these mining companies that we've come to know and love have overextended themselves. They've tried to diversify into AI. They've made a lot of frantic plays in this last year that are going to just make them go out of business. I mean, I don't think they're all going to be around, for the next cycle. But the ones that do make it, I mean, you're going to see giant price appreciations, especially on the options market. We've already seen that a little bit this year. Anytime Bitcoin gets a little excited, these things go nuts. I mean, Marathon, I believe, is already tripled, if not more, this year, at least once. Riot, too. Yeah, so they have, like you pointed out, Q, they have over 6% of Riot, Marathon. They have nearly 1% of Cypher and over 2% of TeraWolf. To put that in perspective a little bit, Marathon is the second biggest publicly traded company that holds, no, the second biggest holder of Bitcoin from a publicly traded company, behind MicroStrategy, of course. So, Marathon has about, I think, 11,500 Bitcoin now. They sell it to service their debt now and then. To put that in perspective, Marathon has 152,000. MicroStrategy's last purchase of Bitcoin, actually hilariously, was more than Marathon previously owned by like one Bitcoin. So they looked at Marathon's Bitcoin holdings and bought one more than them, and that was just in a single buy. So they're leaps and bounds ahead of Marathon. Riot is a little bit further down the list. They have about half, a little more than half, like 60% the Bitcoin of Marathon. They're ticking up to about 7,000. So I don't know. That's the interesting play to me, is just how much Bitcoin then these companies hold on to. And I think it's actually a great time if you're looking. It's not a diversification. It's just riskier and like worse exposure to Bitcoin. But if you have like a high risk appetite, mining options can be a good play potentially. Like really long dated ones, we're talking 6 to 18 months post halving, when you're expecting, and at least historically, the Bitcoin price is appreciated manyfold, and still have these top miners with large amounts of Bitcoin on their balance sheet. So I guess that's my 2 cents on this. I think this is not a huge news out of BlackRock, but I do think they will accumulate in other ways. And I think Larry Fink is coming for all of our Bitcoin. And when I say that, I mean, eventually they're going to pull a MicroStrategy style. Let's just hold this. Let's just custody this. Let's get this on the balance sheet. And they're just going to buy up large swaths of Bitcoin. And when that run happens, I mean, I like to think back to what Adam Back said at B23, which was that we're probably nearing the most amount of people who will ever own a single Bitcoin. And that's because if everyone goes to buy this thing all at once, the price will push that goal out of, it won't be possible. Like the price will just keep pushing. It'll run away. It'll of course crash back down. You know how the cycles sort of work, but eventually, like when these institutions roll in and they're not playing these weird day tradey leveraged games, well, many of them are, but one of the best investors in the world and acquirers of kind of real estate and everything else, BlackRock is probably going to get in it if they decide to, for the long haul, and hold it. And I think those Bitcoin will just be off the table. So when we say Larry Fink's coming for your Bitcoin, that's what I mean. But what do you think, Hugh? What does this mean for the future of BlackRock?
I have to be really honest with you right now. I changed something in my settings and you sound Kermit the Frog just on Restream, though. It's not a YouTube issue. Like, you sound perfect on YouTube. So I
Really?
just need you to know that right now, that's what you sound like to me. And I'm doing my best to be professional about it. But as Miss Piggy just asked me, I think there's an aspect of this that, like, one of the comments I saw on Twitter as a response to today's episode was, shoot, I just had it pulled up. One moment, please. And they're welcome to it when the bid is high enough. Like, I think we're not. All right, so it's my voice that's just fucked. Got it. Okay, I will be louder, Tino. I think there's like this almost acceptance that BlackRock is going to come into space, and
personally, the thing that I continue to point to is this is not something uh to take lightly. We need to we need to have and like our head on a swivel. That's what I'm trying to say. Sorry, it's 7 a.m. where I am, so bear with me for a second while I get used to waking up this early with you guys. Um, Look, we are cheering every single time someone says the word Bitcoin, talking about adopting without thinking of the second and third order effects. As I mentioned when I first started this conversation, look, if BlackRock wanted, they could just completely buy Riot, Marathon, and then all the other miners too, because all the other miners aren't even over $1 billion in market cap. So this would not be very difficult for BlackRock to just get their hands all over. And what happens if they get hands all over it? Sure, we've seen the block size. We see how the individual node runners can become the most important part of the network as it was meant to be designed. But let's not kid ourselves. Like Bitcoin, too many people in this space are looking at Bitcoin as like this is my get rich quick like system, and I'm going to get richer if BlackRock comes into the space and starts bidding up Bitcoin. But that defeats the purpose of what was meant to be as a tool for individuals to be able to transact money freely and save it in an attempt to break free of the sort of fiat tyranny that we've lived under for centuries now, genuinely centuries, if not millennia. So while I appreciate what effect BlackRock can and will end up having, I caution anyone who celebrates this and I just give you a simple warning of be careful what you wish for.
Yeah, I think we can point back to some of the ETF narratives that have been recirculating with this grayscale win over the SEC. I mean, I think it's pretty clear that by some way or other, Gary Gensler is benefiting or incentivized to delay these decisions. And, the root of all evil, like it's these, it's probably BlackRock behind, going to give him a nice paycheck for the rest of his life until they have their ducks in a row ready to launch, the first spot ETF that's going to get approved. And once there's one, I mean, is there really a need for many more? So they'll benefit handsomely from being the first to market. I don't know. What do you think about that, Q? Am I off there? Or is that a fair assessment?
No, I think what will inevitably happen personally, I think the first to market on ETF will be a non-story simply because I think so many products will be offered at or around the same time. We have about 6 different applications that have to be reviewed and the SEC has to give judgment on tomorrow. And a lot of the expectation off of earlier this week was, well, how is the SEC going to delay these 6 given what just happened with Grayscale? So I've been in the camp that has sort of been on the side of if an ETF gets approved, it will be a sweeping motion and a lot of companies all at once will have their approval to go to market. I think especially given the way the SEC has been losing their court cases, I don't I think Ripple is silly. I think everyone who tries to push it forward is in on the scam. But the SEC did lose their court case versus Ripple. They lost their court case versus Grayscale. They have less and less ground to stand on. So ultimately, if the SEC were to turn out and, oh, BlackRock's ETF is approved, but you know what? ARK and Valkyrie and Grayscale, no, your ETF's not approved. It's too, he won't get
I don't
away
think they
with it.
can legally do that. What'll happen is those other companies will just refile to copy whatever BlackRock did.
Right.
It won't take
But
but a day or two.
I would go a step further and just say, like, Gary, maybe 6 months ago, could have gotten away with doing something like that to give BlackRock a 1-day head start. But given the climate around the SEC today, right now, I don't think he could get away with that without looking shady. And I think,
Yeah.
unfortunately or fortunately, I don't know that I have a question, honestly,
They're on their
and I
back.
don't
They're on their back feet for sure. You know.
absolutely. So, like, honestly, I don't mind going a little off topic and asking this if you're open to a quick side
Sure.
quest.
Sure. Yeah.
Um, let's add this as one of our overall questions list, please. But I'll just ask you and have a discussion over, like, is Gary Gensler a good thing for Bitcoin? Like, let's keep in mind he's been one of the only people in public office who literally has said that Bitcoin is a commodity. And I've long said, like, dude, all we need is someone fire Gary Gensler, and then we have nobody at the SEC who understands Bitcoin or sees Bitcoin in that lens. But, like, is Gary Gensler a net good or net bad for Bitcoin and Bitcoin adoption?
Well, that is a difficult question. I mean, I'm not really into like making these value judgments of people and, to what degree they're good or bad Bitcoiners. I don't think it's very productive. Um,
Nah, judge him.
yeah,
He's in
but I
public
think
office. We can judge him.
yeah, fair enough. I mean, I don't vote, but I think
I didn't vote for Gary
Gary.
either. I was just
Okay.
appointed.
Oh, was he? I don't know. Yeah, the guy has an interesting Bitcoin history. I mean, he used to teach cryptocurrency and Bitcoin kind of blockchain at MIT specifically. He's done a lot behind the scenes to kind of support students in their projects at MIT into this kind of research and furthering education before he was appointed to the SEC. But he's also done a lot of like really shady shit that, we kind of talk about on loop endlessly. The thing I like about him is that he understands the difference. And this is where Bitcoin maximalism becomes a little bit inherently statist. It's like, okay, I'm cheering for this guy who's holding public office because he's, you know, giving a hard time to the people I don't like, which by, I don't know, like transitively boosts Bitcoin because, it gives us protection in some ways because we're a commodity and not a security. I think it's really weird that ETH was granted that same sort of protection. I mean, I'm sure there's some kind of money trail there that explains why, because it's like should be blatantly obvious to everyone that it's a totally centralized kind of it's a far cry from even a second place to Bitcoin in terms of distribution. So I don't agree with that decision. I don't know, man. I think if you're holding public office and doing shady stuff like this, you're a net negative to society. But at the same time, like I said, Bitcoin maximalism is a little bit inherently statist, where it's like you can't help but cheer, when he brings a case against Richard Hart. You know, when he
Dude,
goes against what's his the pulse chain Hex when he
yeah.
goes against Hex. I mean, I can't wait for Richard Hart to go to prison. I can't
I mean,
wait.
so I will. It's not even like I'm gonna take the. Actually am having a hard time agreeing with that more and more,
Hmm.
and it's more to do with, like, and a lot of time over the last 6 months, just like reading about history specifically. Like, well, I say specifically political history, but what I've come to realize is all history is just about politics because those are the only people who wrote about what they were doing for the most part. There's some business history, but overall, state history is seen through the lens of politics. My concern, genuine concern, is okay. Gary Gensler goes after Hex, Richard Hart. He goes after Vitalik and ETH. He goes after whoever your heart desires him to go after too. Gary Gensler is not the head of the SEC forever, and he creates a playbook by doing this. And we are literally at a point where all needs to happen is the next chair of the SEC to come out and say, actually, no, I don't think Bitcoin is a commodity. Bitcoin's a security that I get to oversee. And guess what? All of these things that the last chair did, I'm going to now do. I'm going to go after exchanges that only sell Bitcoin because of some weird reason, or I'm going to go after Bitcoin miners, or I'm going to go after people who are holding.
Yeah, I mean
Bitcoin.
it's a spray and play desperation play just to hold up any processes. And yeah, they
Totally.
may well go after Bitcoin at some point, but what are they going to do? I already have my Bitcoin. I'm not worried about it. We should probably address more questions. But yeah, I hear what you're saying. It could make a difficult road for like on ramps and off ramps in the future. It could make it hell. You know, you get something like a New York bit license, and just it makes it impossible to businesses and have technical innovation at home. So
we got really in the weeds on that one, but let's hammer out 2 more news stories real quick. Unless you just want to go straight to the questions.
yeah, no, dig into it. Let's hit the news stories quick.
So first one is just really quickly, the U.S. government is proposing new crypto tax rules. So quick facts on this: crypto brokers would need to collect and file information on their customers to the IRS, i.e. all of the exchanges that you're buying crypto or Bitcoin from. Crypto brokers would include a trading platform, centralized and decentralized, crypto payment processors, and certain crypto wallets. Brokers would need to report information on customers' tax positions via a new 1099 form that details gains and losses. Investors would then use the form to report taxes. The rules are going to effect in 2026 for the 2025 tax year. And surprise, surprise, it was proposed by the Department of Treasury and IRS.
Interesting. At first, I thought, wait, don't we already do this? And then I saw the kind of nuance there is the wallets and the decentralized trading platform. So this is probably a little bit downstream. They got some ideas from, going after the Ethereum mixers, right? And the developers. I mean, this is just an attack on free speech. This is an attack on open source software development. I could see them coming after the creators of BISC. I mean, they'll probably find themselves in jail at some time. Yeah, this is terrible. I hope this can get passed.
And like I want.
Go ahead.
Go ahead. Sorry. No, please.
I was just gonna say, even if it does get passed, thankfully it's at least post halving, and they'll be battling with a bull market. Which presumably, I don't know the future, but greatest bull market we've ever known. I mean, that's gonna have just more resistance. It's gonna make things harder for them. They're gonna piss off more of retail, and get themselves removed from public office. So,
and I hope I triggered you by saying crypto. I intentionally said crypto because I want to, highlight the fact that this law isn't meant to go after Bitcoin specifically. It's meant to go after crypto decentralized exchanges and crypto wallets. Literally all the IRS needs to do is change that word to Bitcoin and then come after us. And honestly, eyes of the government, they view us all as one and the same. So
yeah, this doesn't exclude Bitcoin at all. This is
absolutely
thinking of Bitcoin.
It's just a reminder that we need not look. I can't stand Dick Hart. I can't stand the Hexkins. Feel free, come attack us in the frick comments. I dare you to. Literally, I could care less what you have to say. But I won't celebrate them getting torn down. Okay, maybe Dick Hart. Anyone else, though, I won't celebrate getting torn down because I believe in karma. So let's go to the last news story, unless you want to comment.
I mean, the last thing I'd say is I would just make sure you diversify your options. Yeah, this is a few years out, but this is coming. I mean, Bitcoin, by calling itself money, shows the path of most resistance. And you need to diversify the software you're using. You need to make sure you have a good mix of open source software options in there and wallets. They're all going to get attacked in one way or another. And you want to make sure you have some that are centralized, maybe. I mean, they're efficient to use, but decentralized and definitely offshore and outside of the United States and operating in a way that, you can just access via Tor or something. Keep it safe, mix it up, and also keep searching for access to non-KYC, or as I like to call it, ethical Bitcoin, Azteco, RoboSats, BISC, buy from miners, mine at home. Government has no business knowing how much money you have, where you got it, what you do with it. It's your right. So use KYC free Bitcoin, I guess would be my plug.
We will definitely get into all the nuances of that in a future episode. If you're not subscribed, please, I see 0 people watching, but if you're watching this later, please make sure you hit the subscribe button. Leave a comment with questions you want us to answer. We have one more news story, then we're going to dive into today's episode's questions. But the last news story is Oman, the country of Oman, which I had to explain to Alex, right next to Saudi Arabia and southeast of Qatar, announced they are officially backing Exahertz, an Omani Bitcoin mining company, to expand their operations with a $1.1 billion investment. But the big story here is not just the fact that Oman is now running a sovereign mining operation, but the fact that they have called Bitcoin compliant with Sharia law. Quick shout out, Marty Pent, TFTC, for cluing me onto this. Look, as someone who hails from a Muslim country, I've heard all of the horrors about debt and the way debt is viewed in Islamic and Sharia law. But to have at least a country come out and adamantly claims about Bitcoin, you have to kidding yourself if you don't think every other Muslim country, Islamic country around the world isn't paying attention to what Mon said. Because for the most part, there are two buckets of Islamic countries. There is the oil-rich countries that the West has found themselves very, very entrenched with, Oman being one of them, Saudi Arabia another, Qatar is even another one. There are others that are just sort of exist. We may deal with them in some trade, like Bangladesh, for example, or others that we just absolutely can't stand cut out, like my homeland, Iran, or even countries like Afghanistan or Iraq. And let's not even get to the weeds of Palestine and Syria and that region of the Middle East. So the thing that this unlocks is it is a new starting point for questions to be asked for these countries. And we saw at the end of last week the announcement of the BRICS, where the UAE, with Dubai for those who are not aware, and Abu Dhabi, which is where Marathon just opened up a new mining operation in Abu Dhabi and UAE, Saudi Arabia, Iran, Egypt, Ethiopia, and Argentina have now joined the BRICS, or will be officially joining the BRICS on January 1st. Look, a lot of Bitcoiners talked about, their currency, this joint currency will fail. Bitcoin will rise up. Well, guess what? You have Saudi Arabia, UAE, and Iran, and Egypt all joining a group just on, as Oman is talking about how this is a new form of money that is compliant with Sharia law that we can trade with immediately without intermediaries stopping, preventing, sanctioning us. Fun little fact, by the way, the new BRICS cohort, including the 6 new entrants, accounts for over 60% of the total global oil trade and over 50% of the total global natural gas trade. Just wanted to say that quick little fact.
Great. I don't know Aman personally, so I can't comment on what he or she has or hasn't done. So. We can go to the questions if you want.
All right, let's all right, you know what? Just that you get the question of your dreams right now. Let's talk drive chains. What is BIP 300? Why did you become a shitcoiner? And more specifically, why is everyone so upset?
Well, I didn't become a shit coiner at all. I've spent the last few days looking into this a little bit. I've watched a couple, at least like 2 hours of Paul Stork explaining it, and it's a little bit confusing, but I think the gist of it is side chains like BIP300 is a way for new kind of protocols and token types to be tried out on Bitcoin without there actually being a token. So you're actually beholden to the 21 million Bitcoin cap. The proposal hasn't been tested outside of testnet, but it's been up and running for years. We've been told we should pay attention to it for years. It's not clear to a lot of people, despite that, what it is or, the technical nuances of it. So, wait, what is that? My audio is going nuts right now. Sorry, Q.
No, you're good.
Okay. All right. Sorry. So yeah, I mean, proposed by Paul Stork, we have something similar like sidechain liquid that's kind of centralized. This would be a proposal that would take that centralization out of the liquid network, I guess. No one really uses liquid. I think they do have this vaulting multi-sig kind of setup, I believe. But at the end of the day, it's like, okay, well, some custodian could still kind of rug there, it seems to me. So this proposal would actually, you'd have to actually make a change and fork Bitcoin. And the idea, or what Paul kind of claims, is that people would not have to pay attention to the side chains and drive chains. They don't affect their day-to-day usage. It's like optional. You don't have to pay attention to it if you don't want to. If it were implemented, if you do want to use them, they're there. And his idea has always been that, like, kind of all these altcoins and shitcoins, like, you hear this a lot, like, their innovation is happening there. Like, they have a greater developers and, like, more creativity and more innovation happening. We need to bring that home to Bitcoin. And this proposal, if we had this proposal, if we implemented BIP300, he says that maybe we would never have to make another change to Bitcoin itself again, because all of the changes could be made on this kind of safe, secure, I mean, I can't verify that, sidechain that operates very slowly. I mean, I think the gist of it is it's very easy for, like, benefactors to use. Like, it's beneficial for people who want to run sidechains to use, but it's very hard for attackers to attack. So I think the idea is it takes 3 months for these things and these coins to be settled. Like, you kind of offer up and acknowledge your side chain on chain. It takes 3 months. I am actually not sure if that's calculated in blocks or months. That's a bit confusing to me. It would take 3 months of a sustained 51% attack for someone to steal all of the sidechain kind of tokens or value. So it's very, in 6 months if they only put up half the effort. So that's what we're told anyway. To me, there's kind of a lot to learn about this, but I think the problem is that the people behind it haven't done a very good job of marketing it or convincing people why they would need it. I mean, I'm not really that concerned with bringing home all the innovation. Like, look at all the innovation that happened on Ethereum. I mean, completely ruined. Like, there's no proof of work anymore. There's all these just random problems and innovations that are just complexity theater that make it kind of a useless chain. I mean, it costs more to move the tokens than their underlying value. I don't want something like that to happen to Bitcoin. Granted, it wouldn't with drive chains, but I also don't see why we would need to integrate something like that. To be fair, I also didn't really see much of a need for Taproot.
Well, hang on. That was going to be my next question to you is just, do you
Yeah.
feel like the public sentiment around BIP 300 and drop chains in general is due to Taproot and then what came as a result, ordinals?
Yeah, I think I think so. I think there's a lot of fear. People are really pissed at inscriptions and the fee rates going up, and we've ruined Bitcoin, and blah blah blah. I mean, the fee rate was already a problem, to be fair, before Inscriptions. Like this, fees could have gone up at any point. They have history. This was already present in the protocol. I mean, I think the first thing to understand, like, I'm obviously not a dev, so it is hard for people who are as non-technical as I am to verify what claims are being made about these technologies before they're adopted. Um, and as a result, I think most people who are not devs are a little bit hesitant, as they should be. I mean, Bitcoin's one of the most important open source developments ever. It's changed a lot of lives out there. They don't want to see that kind of ruined. And I think we should, most eyeballs on this code base of any in the world, probably. We don't want to change it or fuck it up. Like, there's a real problem there where we implement something that has unforeseen consequences. There are people that have argued with me on this point, but I just don't see how you can, dev or no dev. Like, every action has a reaction and consequences, and unforeseen consequences are just that. These are bugs that you cannot. Even Paul admits that any change you make to Bitcoin has the potential of unforeseen bugs. So we should be very careful about the upgrades we want to make. I kind of understand the other side of where, like, we don't want no maintenance or upgrades to happen and run into this kind of big company capture, who's making the developments. Bitcoin gets hijacked by the government. There's all these like weird potential scenarios that play out if we lose all of our developers and people stop paying attention to Bitcoin because they can't get anything through. But that in itself is not a reason to just like usher drive chains through. I think his counter argument is, well, you could make all these potential upgrades on drive chains. They would be optional. You would never have to soft fork, hard fork again. I can't refute the viability of that. I thought he said something interesting, though, when I was kind of listening to him talk. He said altcoins are not weird rivals that are inherently evil. Instead, they're just like this place where technology is tested out and previewed before we copied it to Bitcoin. That is not true. A lot of people would like it to be true. And if Paul himself believes that, then why doesn't he test out BIP 300 on Litecoin and show us how it can make Bitcoin more prosperous? Put some skin in the game, get it implemented on Litecoin, and show us how it betters the network, just like was done with SegWit. There's no other path forward here, because his strategy right now of kind of like arguing with, talking down to, and just belittling people who don't agree with him is not compelling. Like, fear mongering what could happen if we don't adopt something is not a compelling case to like take action, right? Like you pointed out earlier, people are incentivized in Bitcoin by riches, eternal riches, right? And securing their wealth without trusted third parties. So I don't know. It's complicated. I'm not sure if I'm doing a good job of explaining it, but it's not for me. I guess I would say it's not interesting. It's not something that I need or would use. And so why would I take the risk of implementing that into Bitcoin? And I don't, there's also this whole complicated thing about how do we make changes to Bitcoin? Like, what is the culture of that? How should they be proposed? How should they be activated? I don't know if you remember, but I don't remember voting for Taproot at all.
Oh, dude, Taproot. It was like the most polarizing thing I had experienced once I was really paying attention to Bitcoin Twitter and the community. Like, I wasn't around for the block size wars, but in recent memory, I can't think of anything else other than what then came ordinals and then now drive chains. As I remember having the conversation with Rizzo of like, the precedent here is that devs can push through changes that they think are best for the network, even if it's a change that we may not necessarily be using this implementation for the foreseeable future. I fully believe that Bitcoin is meant to be used by anyone in the world how they see fit. But I do think there's an important line that needs to be drawn where, sure, if you want to inscribe a fart onto a SAT, go for it. But if it starts to impact my ability to run a node, that's where the problems arise. If we start to make I'm not going to dox who I want Alex to be on the screen with me while I talk this. I don't want to dox who I talked to at Block Boom about this, but a very notable person in this space and I were talking, and his frustrations around ordinals was the fact that like he runs his own server in order to run his node, and his issue is, well, dude, I have to go buy more space because I am running Taproot now. It's not feasible if just in this window of time, the amount of storage space I need to run a node. Imagine what happens over the course of the next 20 years. Like a random individual would only be able to run a node that isn't running Taproot. And so my question is, all of those people who are talking, oh, the Taproot implementation, we can put banned books in there. We can put, instructions for 3D guns, et cetera, et cetera. Well, they're really great ideas. Yeah. Unless not everyone can run Taproot, in which case, I'm sorry, but that's just bullshit.
Well, not everyone needs to run Taproot. That's the point.
Right.
You can run backwards compatible like legacy versions of Bitcoin.
Right. But my point is the whole movement and the whole conversation around, but Taproot will be able, like, you'll be able to do this or that. Like, we could save these things in the blockchain. Cool. But it's irrelevant if not everyone is going to then be able to run Taproot, because to run a node that sort of has that Taproot, you need a larger computer. You need a larger disk size all of a sudden. That is the slippery slope that I see forming. Like,
but that problem already existed without inscriptions. Fee rates are okay. So if you want global adoption, if that's really what you want, that's what you're telling me. We want everyone in the world to fucking use Bitcoin and make transactions. Okay, well, that's going to drive fee rates through the roof. Like, block space is scarce, always has been, always will be. So you have to find alternative scaling solutions. Lightning, I don't know, may or may not be it. It's quite nice. It's super convenient. It's super fast. There are definitely problems, but like this increased demand for Bitcoin is always going to cause a spike in fee rates. That has nothing to do with inscriptions. That's just people using Bitcoin. I'm not pro inscriptions, but I'm not going to tell people how they can use Bitcoin and not. Like, it's within Nakamoto consensus. I'm sorry. And the fee rate argument, I just don't think it's already a problem. Like, we haven't solved for it.
Dude, Bob Burnett had a very scary talk at Block Boom where he was like,
oh, really?
Dude, there's only X number. I'm forgetting the exact number right now, but he was like, there's only this many total transactions that can be done on the base layer. And then he was like, and we really think 8 billion people are going to be transacting Bitcoin on the base layer?
No, absolutely not. And so that's actually one of Paul's arguments for drive chains too. Like, we need new ways to scale. And I kind of agree with him in the fact that, like, we need competition to Lightning. Like, this is not the be all and end all. We cannot get religious about our new technology. We need to diversify. We need competition in the market. We need to push, bad actors out, and we need to have alternatives. Freedom is all about choice. So I need more choices on the table. We need to build more things and break more things and try more things. And I just don't see inscriptions as very important or interesting, to be honest. The outrage is a purely religious outrage by people who are kind of sad that the price is down, and they want to tell you how to use your Bitcoin, which is antithetical to the whole fucking system. So I don't get it. I mean, I don't use I bought inscriptions when it first came out. I made some, I should say, and I think I bought one or two for a friend, and I've never sold them or touched them again. It's not interesting to me. I do see the kind of, let's put files on there. Let's put 3D printed gun files on. whatever. Okay, but there's also people putting like child porn on there. So pros and cons. It's a neutral tool, like all
Bro,
technology.
I didn't know that. All right. We need to have
of
we need to
course.
have a larger conversation not you and I, the Bitcoin community. We need to have a larger conversation at the next conference. What the actual fuck?
But that's a tool. I mean, what are you going to do? You can't censor people. It's an open source tool. What are you going to do? All you can do is moderate your kind of view of that protocol, which is what you're getting. You're getting a nice, curated, censored, in some ways, view. It's not censorship because they can still do it. They can still upload or whatever they want. You know, maybe like revenge porn or something. But
hey, let's stop talking about porn. So our YouTube channel,
so we don't get a strike.
We
don't have any. We don't have any users yet, viewers yet. So we'd be in the same spot. All right, we got 14 minutes to cover a lot of shit. So let's move on.
All right. So
next, wait. Hold on. Let's put a bow on it. What was the drive chains? Good or bad? I don't know. You decide. It's not compelling to me. It hasn't been compelling for like 3 or 4 years. I mean, I just keep being told I should want this thing, and that's not enough for me to want it. Like, I need to see an actual, show me how it will make Bitcoin more prosperous. Show me, please launch on Litecoin and just show us. Stop telling us and talking down to us. Make an example that people can actually take action behind.
Fair. I like that, Bo. I'm going to move to the next question. Do you create a new wallet every time you buy Bitcoin? Short answer, no. Sorry. This was from maybe posting on Reddit.
I think the question's funny in two ways because it has two assumptions that are kind of wrong. Like, you can buy Bitcoin without actually receiving any Bitcoin. You buy Bitcoin on exchange. You didn't create any wallet. You might not have created any address. You might just have kind of an account that's reflecting a balance, So I think what they meant is, do you create a new wallet every time you receive Bitcoin?
No, this was literally the question like on Reddit of will you every time you buy Bitcoin, but keep going.
Yeah. I mean, you know what I mean? Like there's a kind of a difference there. It's like, okay, you have to like ask what is a wallet first. A wallet, an address is kind of within a wallet in the popular way that we think about it, but both are kind of like insufficient explanations for what they do. So no, you do not create a new wallet. Like most wallets these days are hierarchical, deterministic HD wallets. BIP192. I probably totally missed that. But the point is, you have kind of an endless number of addresses that are generated through your seed phrase, which is kind of like the signing access to your wallet. The confusing thing about wallets are it's like kind of not a complete term because you have wallets that also can't spend Bitcoin that are perfectly valid wallets. You have watch-only wallets. You have brain wallets. You can store Bitcoin indefinitely without the ability to actually spend some. And yet you retain the ownership of that Bitcoin and the ability kind of to use it into the future. You can vault it. You can multi-sig it. So wallets are like extremely complicated. And I think the problem with addresses, it's like this really pervasive misconception, is that's not really what they are. Lightning actually did a better job of getting this right from the get-go. These are invoices. So you're only sending a receive address. You're invoicing someone or something for this Bitcoin that you will then receive. There's no from address in the protocol. It's deterministic. It's heuristic. Like it's not... it doesn't work the way that we so often say it works, like with a to address and a from address. Like that's not correct. That's just kind of the weird way our brains think about it. So I guess short answer, do you create a new wallet every time you buy Bitcoin? No. And then what I think they meant, do you create a new wallet every time you receive Bitcoin? I hope not. God, you'd have so many seed phrases to manage and it would just become a nightmare. No, rather you probably have one or two or three or maybe multiple different kind of seed phrases. By the way, you can have multiple wallets that are all interacting just with one seed phrase. So you can have a watch only wallet over here The backs to one seed phrase. You can have a signing wallet over here, backs to one seed phrase. You can have it in your brain. Yeah, so it's a kind of a complicated, interesting question, and I can understand why that's super confusing for newcomers. So I would think about it. The popular way to think about it is no, but you hopefully are using a new address every time you receive Bitcoin. If you double send to addresses, that gives you kind of a privacy vulnerability. And maybe it's easier to think about it like this. You should be sending a new invoice every time you want to receive Bitcoin. I hope that was thorough and not confusing.
So short answer is no. You also just not like, I'm just going to throw an arbitrary number, but like maybe like 3 out of every 10 times you buy Bitcoin, you're like not even buying Bitcoin. You just the IOU slip. We want to
I'm
talk
very good at it,
UTX.
but yeah.
Do you want to talk UTXO differences or save that for a different conversation?
It's like a whole different can of worms.
All right.
I think we just stay high level with this one. Yeah.
Let's move on to the final question. So this one also comes from Reddit. Shout out community at Reddit for potentially helping us bootstrap this show. If you have questions, whether you're on Twitter, whether you're on YouTube, whether you're on Rumble, drop them in the comments down below. Leave us a comment, shoot us a DM, whatever. We'll answer your question.
Oh, by the way, shout out to everyone watching on Zap.stream and X.
Yes.
No, sure.
Yes.
X both, and YouTube and Rumble.
What was I going to say? Oh, damn. All right. Still too early in the morning for me. All right. Let's move on to the final question for today. What if I purchase Bitcoin, but I don't sell it and I give it away? Do I still need to pay taxes on it? Well, my friend, we have some good news. It's very good news for you. So, do you need to pay taxes on it? No, you do not. First off, it's a gift. You don't need to pay taxes on it.
This is not financial advice.
Yeah. Oh, yeah. We are not. Okay. Yes. Caveat all of this. I still live in my mother's basement. So you'd probably go and actually talk to an accountant. This is just accountants off of Reddit and my ChatGPT bot and Google Bard bot cross-referencing all the tax advice I got. And even they would tell me, like, go talk to a tax professional. So you should also talk to a tax professional. But the short answer is no, you don't need a tax on it, nor does the recipient, under the caveat that so long as you don't send more than $17,000 and so long as they have in a year in gifts, and so long as the United States lifetime gift tax exemption has not been surpassed, which for 2023 is just shy of $13 million. If either of these thresholds, so say McShane for my birthday gave me whole Bitcoin. What is it? I didn't look at the price this morning.
27.1.
So I would owe on $10,000 worth of Bitcoin a 40% tax on that amount because it's above 17,000, right? I know. So under the legal definitions, I'm going to read one of my favorite things about the current regulatory climate around Bitcoin specifically. Gifting crypto is a, quote, non-recognition event for capital gains tax purposes, meaning there's no capital gains tax owed by the person making the gift, so the gift giver. Rather, the cost basis is inherited by the recipient, which will be used to calculate capital gains tax if they eventually sell the asset. I saw conflicting reports on that second line, so definitely talk to your tax advisor there, because there was one argument that said, well, actually, it's the price you receive it at becomes your cost basis, so you would theoretically only pay gains from there. I saw others saying exactly this. Really want to emphasize, like, you should not be listening to a guy who lives in his mother's basement for tax advice. At the same time, however, look, there are legal loopholes that the government has designed that it's on us to use and find them as we see fit.
I don't know. The whole point of Bitcoin is it's permissionless. So I'm not telling anyone to evade taxes, but like it's really up to the individual how they want to use their fucking Bitcoin if they self-custody it. And you can't force them to pay taxes on this stuff. I'm not advising you do that. I'm just pointing out that if you're to flee the country and a magical gift of a bunch of Bitcoin happened to show up at the doorstep of your destination country, there's not really anything anyone can do about it. You can travel with it in your head. You can travel with it secured in like discrete geological locations. So I think all the taxes that the government's going to get off Bitcoin is, I don't know. It's good for them, but it's ultimately at the end of the day, for those who self-custody, it's user choice. And gifting it is going to be really increasingly hard to track as we, especially if you have a good stack of non-KYC Bitcoin.
Well, I think
I'm not
that's a
promoting that
really
at all. I'm just pointing out that the technology does not support the government's ability to kind of confiscate this without
Right.
like extreme coercion.
So there's something they said that I think is really important, which is, and it goes back to this idea of like extreme coercion by the government to extract the information, and that's the KYC route.
Yeah.
I still sometimes will buy Bitcoin on Strike. If I were to go and sell it on Strike or on Cash App, because those are KYC or even Coinbase, wherever, those are businesses that report tax information based on the crypto law we talked about at the beginning of the episode. Like they would then have to disclose, like, hey, Q sold this or sold Bitcoin, received this much money off of his sales. So I think that
Yeah, this is why you
unfortunately,
have to learn how to mix and self-custody and use non-KYC Bitcoin. Because it's not anonymous. That's if you're brand new to Bitcoin, that's a myth. That's not the case at all. It's pseudonymous. And it's not hard to deterministically prove who, they're just going to use probabilities, and it's actually going to be the reverse. It's going to be on you in court to prove that you are not fucking guilty and that you do not have access to or own that wallet. And that's impossible. You can't prove a negative in that way. So you got to be really careful, I guess. Just kind of bite the bullet, pay your taxes. Maybe the solution is don't give Bitcoin to people. Don't gift your Bitcoin because they're probably going to lose it anyway.
oh, I guess that'll do it for today's episode, unless there's anything else your heart desires.
I think that's it. Don't forget to like and subscribe. Big shout out to those on zap.stream. Thank you very much for your sats. Keep this thing running. Please like and subscribe on YouTube, Rumble, wherever you find us, x.com. And feel free to chime in questions and send them to us in the DMs. You can find me on Nostr, Twitter, Q. Shout out to our producer, Tino. And thanks for joining us. We'll be back tomorrow at 10 a.m. Eastern.
Oh, man, 7 a.m., bro. Just call it what it is.
All right. Yeah. 7 a.m. our time.